Bank of America has significantly increased its Bitcoin exposure during the first quarter of 2026, while reducing its holdings in Ethereum and Solana-linked investment products. The bank's latest 13F filing with the SEC reveals that Bitcoin-related positions now dominate its crypto portfolio. BlackRock's iShares Bitcoin Trust, known as IBIT, became the largest single holding in the bank's cryptocurrency portfolio, with Bank of America increasing its stake to nearly $37 million. That move means the Bitcoin ETF now accounts for almost 70% of the institution's total crypto exposure. This shift reflects a broader trend among institutional investors, who are increasingly favoring Bitcoin-focused products over altcoins like Ethereum and Solana. The filing also shows that Bank of America holds smaller positions in other Bitcoin ETFs, including Fidelity's FBTC and Bitwise's BITB, as well as several Grayscale-linked funds. This suggests a strategic consolidation of crypto assets toward Bitcoin, even as Ethereum and Solana positions shrink. The move comes amid a broader industry trend where major financial institutions are expanding their regulated crypto exposure through ETFs rather than holding native tokens. At the same time, Bank of America's decision to cut Ethereum and Solana exposure highlights a growing divergence in institutional sentiment between Bitcoin and other major cryptocurrencies. Ethereum, which has historically been a top choice for institutional investors, is now being sidelined in favor of Bitcoin's more established and regulated investment vehicles. Solana, a high-performance blockchain platform, is also seeing reduced institutional interest. This shift may. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Be driven by Bitcoin's growing adoption in the ETF space and the regulatory clarity that comes with it. The dominance of BlackRock's IBIT in Bank of America's portfolio is a clear signal that institutional investors are placing stronger confidence in Bitcoin ETFs as a reliable and compliant way to gain exposure to the cryptocurrency. Meanwhile, Ethereum's declining institutional interest could signal a broader reassessment of its role in the crypto market, especially as Bitcoin continues to solidify its position as the leading digital asset. The portfolio changes also reflect a broader trend in the financial industry, where major banks like Morgan Stanley, Goldman Sachs, and JP Morgan are expanding their crypto ETF investments. This indicates that regulated crypto products are becoming a more accepted and mainstream asset class. However, the shift away from Ethereum and Solana raises questions about whether these altcoins can maintain institutional interest in the long term. For now, Bitcoin appears to be the preferred choice for institutional capital. The next signal to watch is whether other major institutions follow Bank of America's lead and further consolidate their crypto portfolios toward Bitcoin ETFs. If more banks and asset managers begin to reduce their altcoin exposure in favor of Bitcoin, it could signal a broader market shift that favors Bitcoin's long-term dominance. The mechanism behind this shift is likely tied to the regulatory environment and investor demand for compliance. Bitcoin ETFs, particularly those like IBIT, offer a familiar structure and regulatory oversight that many institutional investors find more palatable than holding native tokens or investing in less mature crypto assets. This preference could lead to a self-reinforcing cycle where Bitcoin ETFs attract more capital, further solidifying Bitcoin's dominance in institutional portfolios. The stakes for this shift are significant. If Bitcoin continues to attract institutional capital at the expense of other cryptocurrencies, it could lead to a more centralized market dynamic, with Bitcoin's price and adoption being increasingly influenced by institutional decisions. Additionally, companies like MicroStrategy, which hold large amounts of Bitcoin directly, could see their indirect exposure to Bitcoin grow in importance as institutional ETF allocations expand. The next signal to watch is whether the broader market reacts to Bank of America's portfolio changes. If most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Other institutions follow suit. It could trigger a wave of capital reallocation that further strengthens Bitcoin's position relative to other cryptocurrencies. This could also lead to increased volatility in the altcoin market, as institutional investors shift their focus and liquidity moves accordingly. Ultimately, Bank of America's decision to boost Bitcoin exposure while cutting Ethereum and Solana holdings reflects a growing institutional preference for Bitcoin as a regulated and reliable investment vehicle. As the crypto market continues to evolve, the lines between traditional finance and digital assets are blurring, with Bitcoin serving as a bridge between the two. Whether this trend continues to accelerate will depend on regulatory developments, investor sentiment, and the performance of Bitcoin ETFs like IBIT in the months ahead.